welcome. This is Property Hotline. I'm Kavita Krishnan and we are answering questions on home finance today in the studio. I have P V Subramanyam with me. He's a home finance expert. Subra, welcome to the show.
Hi, thanks.
Let's get this question in from Ravikant. He's written an email and he says that he wants to buy property in Mumbai and his preferred area would be Bandra. His budget is 80 lakh rupees. He's ready to pay 35 lakh rupees as partial payment, but for the rest of the amount, he would require finance. What would be the best finance options available, he says?
80 lakhs in Bandra,
that is the first
you a
big
house
question.
Is news, because I don't know which part of Bandra you're talking
Ravikant,
about.
if you do get a flat in Bandra for 80 lakh rupees, please come back and let us know where you got it and how you got it. Of course, it will be a very, very small flat because Bandra property rates are
but this could be
high.
something in Bandra East that he's buying something and
right.
there it's not that bad. Yeah, what can you do? There are 86 companies today offering housing finance. So really, you are in a buyer's market. You can choose where you want to go. If you're willing to do the hard work of legwork of going and talking to banks, etc., then the PSU banks might offer you the finest rates. However, if you're not so willing to put in effort, then you can go to the private sector banks where the service might be better, but the rates would definitely be higher. Then you have a choice of NBFCs like LIC Housing Finance, HDFC Limited itself, etc. So really, you have a huge choice. You can even go online and check for the best options and shortlist 2 or 3 and then you can get. And 55 lakhs for an 80 lakh house seems to be possible. It should not be much of an issue. Of course, it's a function of how much you are earning and how much other loans you have, etc. But it should not be much of an issue.
Right, and Ravikant, to make that choice a little bit more easier, my team will put up the rates that different banks and home finance companies are currently offering. But before we move on, Subra, this Ravikant sounds to me like a person who's taking a home loan for the first time, a first-time borrower in that sense. For all the other first-time borrowers also who are tuning in, could you give them a breakdown of what preparation you essentially need to do before you go hunting for a home loan?
Yeah, first of all, you need to decide where you want to buy a house and be very clear that you're going to live in that house for 10-15 years. So if you're a bachelor and you're 28, then you don't even look for options like is there a school nearby, because that's not your requirement. But 3 years later, 4 years later, 5 years later, you might require a school. So look for those things. Look for if your parents are going to stay with you, see whether there is a nice hospital available nearby where you can take them in case of an emergency. So look for those facilities first. Then decide on the options based on schooling, hospital, whatever you want. I mean, you want a temple, you want a church, whatever you want. You look for those things and then decide. Don't be in a hurry to decide.
So check your home loan
location.
eligibility first or look for the home first. What would you suggest?
Actually, you should look at your ability to repay. What is the ability that you have to repay? So the losses, or every finance company looks at something like 30% of your pay is what you should be able to pay as an EMI. So for a person earning say 1 lakh, 30,000 rupees should be the EMI, which means you can get a 30 lakh rupee loan, and that would approximately work out to that. So first look at what you can buy for that kind of money for 30 lakh loan, where again maybe you put 30 lakhs of your own, so about 50-60 lakhs, what can you get? And then look at all these options and then buy. So don't be in a hurry to buy just because a builder has announced or things like that. A builder has announced is very good. You can afford to buy. Then if the location is nice and you like all the facilities, then go ahead. So but first look at your ability to repay. If your father or somebody is going to repay along with you, then see how many years he has to retirement. See if your wife is going to repay. If she is going to get pregnant and take 2-3 years off, then will her income be there? Look at all these before you jump into buying a house.
Right. Essentially, it's a long-term commitment that you're making. A minimum of at least 10 years, 15 years, if you intend to prepay that loan. Typically, home loans extend to up to 20 years. So you need to keep all of this in mind. You need to keep eventualities in mind. How much should you save before you actually go and take a home loan?
Look, I'm very old-fashioned. I still believe you should save something like 50% of the cost of the house before you take a loan.
20% anyway you have to pay.
20% you have to pay, and a lot of other things like brokerage and registration charges you have to pay. So 30% to वैसे भी बनता ही है. You're better off saving something like 50% so that in case there is a problem tomorrow, you'll never have to worry about selling the house and repaying the loan. So 50% is what makes sense, but yes, if you are very aggressive and you want to buy, you can go up to 30%, but don't go below that. With too many companies offering loans today, there will be pressure on you to take it, take even more, saying we will give you a top-up loan, we will give you a furnishing loan, we will give you a registration loan. Don't fall for those gimmicks because you have to repay anyway.
Right. Right, all of that things to remember, and also keep watching Property Hotline. We will, of course, keep telling you about the different things that you need to consider when you are taking a home loan, the fine print that you should be reading, your rights as a home loan borrower. We have a question from Anshuman now. He had taken a home loan of 1.51 crore from Bajaj Finance at 10.57% about 2 years back. Now, he's taken possession of this flat 2 months ago. With rate cuts happening, other banks are offering him a lower rate of interest. Now, he wants to ask if he can switch over his home loan to other banks. He wants to know if he'll have to pay foreclosure charges. What he does know is that if as an individual he has taken a home loan, banks and NBFCs both cannot charge foreclosure. But more important, he's paying 10.57 when most banks are averaging around 9.15 to 9.35%.
Yeah, actually, when you try to close, they will charge you something like documentation charges or one-time processing fee of 10,000, etc. So you need to do a small Excel calculation to see whether it is worth doing the shift, because you're going to pay some processing fee here and some processing fee there. So add up to all that, and then if it is worthwhile, at least 1.25% clear advantage has to be there. And since you have repaid only for 2-3 years, yes, you have a long way to go. It is worth shifting. So shift to somebody where you clearly have a floating rate and that they will change as and when the rates fall. But I don't see the rates going down too much, maybe another 1%. So you want to make a change, you can make a change now, or you wait for some more, one more RBI rate cut or something like that, and that might bring it down even further. But yes, you should make a change if your existing Bajaj Finance is not reducing the rates. But there's no reason why they won't. So push them, they will. If they don't, change.
Are you expecting another rate cut soon?
I really don't know. The banking industry seem to be wondering what to do with so much of money. So perhaps there could be a rate cut, but RBI signals are not clear. So
yeah, they have not been very clear on what they want.
And anyway, in the 20-year thing, it doesn't matter next one quarter whether interest rates are lower, because 2 years later, maybe the interest rates would be back to 11%.
But for those who want to shift, want to switch loans, and who are thinking about it, because banks are slowly passing on the earlier rate cuts that we saw. If you are in the initial part of your tenure, like you said, and there is at least a 1.25% rate differential, then it makes sense to change. What if you have paid off a substantial amount of your home loan, you are in the latter latter 5 years or so, does it still make sense to move?
It may not make too much sense if you're not very confident of the paperwork of the new borrower, of the new lender. If your old lender is good and you know your papers are in good shape, it may not really matter much. And in India, people take a 20-year loan but mostly end up repaying in 7 or 8 years. So if you've already paid for 5-6 years, for 1 or 2 years, do you really want to change? I don't know. It may not matter too much if the percentage is so small. Of course, the loan is very big. If it's a 10 crore loan or a 20 crore loan, yes, it can make a difference. But if the loan amount itself is very small, then over the last 1 or 2 years, it won't make too much of a difference.
But net, here's what it adds down to. If you are looking to switch your home loan, first look around in the market, see what are the better deals available. Of course, approach your own lender and say that this is what I'm being offered and what can you offer me. Chances are your lender will give you a better deal, because nobody really wants to lose a customer at this point in time, especially banks and home finance companies. And thirdly, of course, remember that magic number that Subra just told you, 1 to 1.25% differential is what you should essentially be looking at. If you are getting that, then it makes sense for you to shift your home loan. Sharath has written in through email. Now he says that he wants to know if there are options to avail home loans from banks in India if one is working outside the country. He also wants to know if there are any exemptions available in the rate of interest.
Yeah, the second part of the question, I don't understand. There are no exemptions available in the rate of interest. But yes, the advantage is if you're working in a country whose currency is gaining against the rupee, which means if you work in, say in US, then there's a huge advantage because you're borrowing in rupee, you're earning in dollars, and when you're repaying, the amount of dollar repayment which you do will be very small. Is a home loan available? Yes, of course a home loan is available, but the minute you tell them that you're an NRI and your papers are processed as an NRI, you may have to repay only from your foreign income. But that should not be an issue if you're anywhere abroad and earning money. But please remember, the rupee has actually gained against many of the currencies over the last 6-8 months, even against the pound and against the Australian dollar. It's only against the US dollar that we have lost. So if you're in US and you're borrowing, you're definitely going to get a huge advantage of the currency. In other places, I don't know whether it will be too much of benefit of currency, but yes, can you get a loan? The answer is yes. Is there a concession? No.
You spoke about the differential in currency, currency, but also there is a differential, and there is a huge differential in interest rates, especially in countries like the US. They are moving up from an interest rate regime of 0
Correct.
to say they are at 1,
Correct.
2%, etc. We are at 9% on an average, 9 to 9.5%.
Correct.
In that sense, how does that work? How does that work to the advantage or disadvantage?
The so-called interest differential which is there, let's say it is 1% or 1.5% in US and 9% here, you will make up in terms of currency loss. The currency depreciation will be 7-8% in a year. So if you take the sigma of currency loss and the interest, it will more or less add up to 9. So it does not really,
even if you're living abroad, interest rates are really, really low. It still makes sense for you to take a home loan in India for a property that you're purchasing in India. And of course, there will be other issues if you do take a home loan in foreign countries and try to send that money into India.
It may not be possible for you to take a home loan because they might also want some security.
Exactly.
But yes, you might be able to get a loan in the US and then you use the money to buy it here and then you repay the loan there. It should not be much of a problem. But no, it will not be called a home loan because you won't be mortgaging this. This is just a loan. You can go into a foreign bank, borrow money and buy a house here. That is possible. And you will end up repaying that loan. It should not be very difficult, but it's your call. Currency risk is your call. If you have got a good job in US, there is no currency risk. You're anyway going to earn in US and repay in dollars. So you can still do that.
The easier route, of course, is to take a home loan in India.
Yes.
Query from Parag Desai now. He says he took a home loan of 40 lakh rupees for 15 years from LIC Housing Finance. He has been paying EMI for the last 46 months. Now he wants to prepay his entire loan by selling his flat. He wants to know the procedure of prepayment of his loan. The loan is 1 to 24 months of fixed rate of 10.25% and 25 to 180 months of floating interest. This is one of those teaser loans, I'm guessing.
Yeah.
He availed the loan in March 2014. What is the total amount he needs to pay to the LIC Housing Finance? What will be the principal and interest amount he needs to pay? Does he need to pay anything extra for prepaying his loan? Are there any other charges he needs to pay?
I think this is a straight 1-minute question to LIC Housing, and they'll be able to give you all these.
Exactly, they should. The banks, essentially, the finance company should give you a complete breakup of all the payments that you need to make to them. But again, the issue of foreclosure charges. Are there any charges he needs to pay over here?
Actually, you have to look at the agreement. Normally, the answer is no, there should be no foreclosure charges. The Reserve Bank is very clear, or the NHB is very clear, that there should be no foreclosure charges. But they may not call it foreclosure charges. They may call it processing fee or something like that, and they might charge you. And if you're going to anyway sell the flat, and then you have to repay, because you cannot sell the flat and keep the loan. The mortgage is created on the flat. So the minute you want to sell, they will ask you to repay the loan. So it's a catch-22 kind of a thing. You have to repay the loan to sell the house, or sell the house to repay the loan. But yeah, you can do that. And yes, LIC Housing should be able to give you the working of all this. In 1 minute, they should be able to hand you over a paper showing all these calculations. To my mind, there should not be a foreclosure charges, but I really don't know how practically what will happen when you go.
Right. So go and check with your housing finance company. They should give you a workup of all those numbers over there. We have Madhusudan, who has sent us a question through email. Now, he has taken a loan of 39 lakh rupees and purchased a flat. His salary is 70,000 rupees per month. He's planning on investing in an under construction property which he can move into by 2019. Now, should he sell his flat to invest in the under construction property so that he can pay slab wise, is a question he's asking. More than the home finance aspect, what strikes me is the risk that he's undertaking as a home buyer over here. He has a flat. He wants to sell that ready flat, which I don't know whether he's living in it or not.
Yeah, it looks like he's
and he
not
wants to
living in it.
invest in under construction property. How advisable is that?
No, I think at this stage of your life with a 70,000 rupee take home and a 40,000 rupee EMI, I mean, I'm assuming you borrowed 39 lakhs, so 39,000 rupees should be the EMI. You're already neck and neck. Why do you want to do anything very different? And especially if it is a flat in which you're not living. Yes, of course, you can sell that flat, repay the loan, buy an under construction property. But if the under construction property is not from a good builder and it takes a long time and 2019 becomes 2022, I would see you struggling because you're already paying 40,000 rupees, which is almost more than 50% of your take home salary. So I don't know whether you should be doing any of those things. Of course, I don't know, have your full balance sheet. I don't know what other assets you have, whether you have invested in mutual funds. I don't know any of those things. So I don't know. But yeah, under construction property for a first time property buyer does not seem to be very sensible. Under construction property should be a property gamble which a person who already has one house, loan paid off, staying comfortably, yes, he can do. It's not meant for everybody to enter into under construction property hoping to make money the minute the construction is over. It doesn't happen that way.
Also, the other thing that he says about, doing this so that he can pay the loan slab-wise. What is the difference in paying EMIs, whether it is an under construction property or whether it is a property that is ready?
Yeah, and what do you get by paying slab-wise? The interest cost is built into it by the builder. Today, if you go and tell the builder, I'll pay you completely upfront, he'll obviously give you a much bigger discount. When he takes you money from you slab-wise, the interest is being paid to the builder. Otherwise, you borrow money from a HDFC or an LIC housing finance and you pay interest to them. So it doesn't really matter. If you have your own money, then it's a different thing. But paying slab-wise or paying an EMI, it's not very different.
So Madhusudan, essentially, I don't know whether you're doing this under any scheme or anything that you've been offered, but you really need to look at what it is that you are planning to do. On the face of it, it really doesn't make sense for you to sell a ready property that you own to buy under construction property and take a home loan to pay it off. There is just too much of risk that you are getting into over there. Vikram writes in through email. Now, he wants to know the basic documentation needed to get a loan sanctioned. He asks who can be co-applicants, how is eligibility determined, and what is the repayment period. So again, a new home loan borrower by the looks of it. How do you determine loan eligibility? Yeah,
loan eligibility depends on your Form 16, which means what is your total salary. Assuming you are an employed person, it's your Form 16. If you are a business person, then the income tax return that you file. So that determines how much of loan you will get and who can be your co-applicants. It could be your brother, it could be your wife, it could be your son, it could be your parent. Any of them could be your co-applicant, and that person's income will also be taken into account while determining this. How is your loan eligibility determined? It depends on your repayment capacity, and repayment capacity is a function of how much you are earning and how much you are already borrowed. Suppose you have taken a car loan, you have taken another housing loan, etc. All that is eating into your repayment capacity. Now, if you are in a good company and you have good qualification, they are assured that even if you were to lose this job, you will get a similar paying job. Your wife is also well qualified, she is also working, then all that adds up. If your wife is earning somewhere through tuitions, etc., then that is not given so much of weightage. If your company is good and reputed, again your ability to borrow goes up. So it's a function of all this. They look at your last 6 months bank statement and they find that you're not spending too much, you're able to save a lot of money. They know you'll be able to repay well. So all these will determine. Now, if your father is a co-applicant and your father is 48 years of age, for the next 12 years, they're not worried about the repayment because your father will also. But if your father is retiring at 60, then to that extent, your father being a co-applicant doesn't help much. So yeah, all these things. But if you've got a younger brother or if your wife is more or less your age and you're both 30 years of age, you've got a whole 30 years to repay. Yes, you can take a 30-year loan. The longer the loan, the lesser the EMI that you will pay. But remember, the longer you pay, the more interest you're paying. So don't be tempted by a lesser EMI because you're getting a 30-year loan. If you can do well with a 20-year loan, take a 20-year loan. If you must, then go for a 30-year loan. So all these factors. What documentation you need? Obviously, residence proof like Aadhaar card and PAN card and salary slips. Form 16 and your bank statement. These should be good enough.
Right. Subra, also could you elaborate on credit score, because we have a lot of first-time borrowers who've written or called in on the importance of the credit score, because that is something that banks and HFCs are looking at very closely when they are giving you your home loan these days.
Yeah, see, the credit score which we are talking about is something which was there so-called to help the borrower, and the the score said how good you have been in repaying your past loans. So if you have some credit card which you have not paid, or some other housing loan or car loan where you have defaulted, or even very simple, your rent on which you defaulted, or your telephone bill on which you are not paying on time, all this goes against you and your score keeps reducing. But any score above 750 and you're in good territory. But if you have if you made a mistake, like you took a credit card and just threw it away, never used it, but it had 500 rupees charges, but that was 20 years ago, and today it is about 1,00,000 of rupees because you just ignored them, all that is going to hurt you. So don't do anything very foolish, because all that is going to hurt your CIBIL score. And if your CIBIL score below a particular number, they will not even consider you for a loan. Forget charging you a higher rate. So when they just look at your CIBIL score and say, "Aapko hum loan nahi denge," it's something for you to be scared about. It is go and check your score and see how you can get it right. Largely it would be something like this: some credit card was sent to you, you didn't use it, and there was some minimum 500 rupees charge that got added, and then there you see the power of compounding, and suddenly today you will have to repay about 1 lakh. What do you have to do? Sit, fight, argue, take a letter saying everything is settled, make sure that goes into CIBIL, and it will take you another 6 months for your CIBIL score to improve. So please be careful about your leaving your financial footprints. Today all your financial footprints are being measured by somebody called CIBIL. Of course there are two others, but largely in India it is CIBIL which will give you this.
And of course it's the sources through which CIBIL and other companies, credit rating companies, can track your financial footprints will only keep increasing now that a lot of payments are getting online and getting electronic. One is often told that if you are planning to take a home loan, maybe a year or 2 years down the line, it would do well for you to actually go and get yourself a credit card and start using it. Are you on board with that?
No, I don't think so. Not in India, because we are still a very cash economy and people do use a lot of cash. So using a credit card is useful if you know how to use it very responsibly. But if you are not very sure, then don't take a credit card, because there's a chance that some bill remains unpaid and you actually ruin your score. But taking a credit card and using it is a nice way of telling CIBIL that you have arrived and you've taken 3,000 rupee loans and 2,000 rupee loans and you're repaying. So they have some track record of yours. Is it necessary to do? It is advisable to do, yes, provided you are very disciplined. If you're not disciplined, don't get into it. You don't really need it, as long as you have your debit card. But yes, they will not know anything about you, but they will give you. If they don't know anything about you, you will not have a very bad CIBIL score. You will not have a CIBIL score, that's all. So you will still get it. But if you have a credit card and you did not repay at least once, that can bring your CIBIL score down. Does it help to have a credit card? I'm sure it helps to have a credit card, because you still have to buy your airline tickets and anything you want to buy online, you need a credit card. Use it, but you don't need to just to
You don't need it just to ensure that you get a home loan.
Yeah.
We have Shailesh, who sent a very interesting question through email. Now he wants to know if a loan can be converted from a fixed rate loan to a variable rate loan and vice versa. So he wants to go from fixed to floating and back.
I don't know whether he wants that. He wants to know whether it is possible. Why would somebody... See, at no stage will you be able to say that I want to go from fixed to floating and then back from floating to fixed. That would be very difficult. But yes, once interest rates come down to, let's say 7.5%, 8% is your home loan, and you feel that now interest rates will only go up. Can I get a fixed loan? Fixed rate, right? Now, home loan giver will obviously charge you a premium to that. So if 7% is his floating rate, he will give you a 8% fixed rate or 8.5% fixed rate with the clause that every 5 years I will revisit this. Because after 5 years, if the interest rates are 9 or 10...
Which is precisely the question that I was going to ask. Do you actually have a plain vanilla fixed rate loan anymore?
It will, if it is there. If I were to design a product which is a fixed rate home loan for a 5-year, 7-year period, I would be charging something like 12%. So obviously nobody will come and buy that product because I have to insulate myself against. India is a growing economy. It's still in the developing stage. So if it grows very fast, interest rates will go up because there will be demand for money. So if interest rates are 11%, 12% and India is growing at 11% and 12%, why will I be stuck with a 7% loan? So I will die because I will be getting funds at 12% and I will have to give it to you at 7%. It's not going to work. So I will not do that.
Essentially, this is what happened with a lot of banks post 2005 when interest rates suddenly started going up. I remember kicking myself for not taking a fixed rate loan because I'd taken a home loan at 7.5% and that was floating rate at that point in time. But what we learned in that period is that also a lot of us found that after a point in time, even in a fixed rate loan, banks did come back and increase your interest rate by a certain quantum. That was actually written into the contract. Right,
yeah, it will be at least every 5 years banks will visit because when they give you 20-year loans, they have no clue how interest rates are going to behave over 20 years. I mean, many bankers got the last rate call from RBI wrong. People thought there was going to be a cut and there was no cut. So very difficult to predict even over 3 months. Why would somebody predict over 5-6 years? It could just kill an institution.
Would you advise Shailesh instead to be more proactive about the loan that he, I'm assuming that he already has a home loan. Would you then advise him to be more proactive there?
See, understand one thing. If you have a floating rate, know to what it is linked and how often it will be reset. Will it be reset every month? Will it be reset every quarter? That is something you should know. These are two factors which you should know. So you are today at 8.5%, and it is linked to Libor, it is linked to MIBOR, it is linked to something that is Mumbai Indian Bank offer rate. You should know to what it is linked and how often it will be reset. These two numbers you should know. In your agreement it is there. Read it and just make sure that when there is an interest rate that your EMI amount changes. This is something which the bank will tell you. So as long as you do that, you're fine. Don't try to take an interest rate call on 3 years and 5 years. Most of the fund managers get it wrong. So don't try guessing long run range rates.
So Shailesh, what you essentially need to do is, one, read your loan agreement. Second, there is a statement that the bank sends you on an annual basis. Read that statement. You will know where you stand as far as repayment for the home loan is concerned. What is the EMI you're paying? How much is the principal amount that is going? These are things that your home loan statement tells you. And it also tells you at what rate of interest you're getting. You can actually take a call based on that, whether you want to increase the EMI that you're paying, whether you want to increase the principal or component in that, and whether you want to negotiate for a better deal with your own bank or move to another bank. With that, we do come to an end of this episode of Property Hotline. Subra, thank you very much for coming in and giving your insights. We will, of course, help you with answers to all questions on real estate. It could be buying, selling, investing, legal issues, home finance like those we answered today, or taxes. So call, write in or personally tweet to me. We'll get your questions answered. Thank you for watching.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/Magicbricks Now. And don't forget to click the like button. You can also follow us on Twitter at Magicbricks Now. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/Magicbricks Now.